Hi guys, today I will show you the intraday chart. Now the marks that you can see right here are from the daily charts. Now just to show you right here on the bull run, what really happens is it makes double tops and then the highest drop from the price level right here as well. This was the first top, the highest high, and then the highest drop. But if you look from the lower level, example here or here, the lows begin to move higher. Now this low is lower, this low is higher. And that's the main reason. If you look at the fall, the highs are also getting lower and the lows are also getting lower. So it's all about highs and lows. The long trend. I'm not talking about a shorter term trend. Now it's intraday chart, but on the intraday level, the longer trend is this trend rose from October 5 till it's May 11 till June 6. So it's a 1 month trend up. And then the highs dropped and it dropped as well. So the basic theme is highs and lows. That's the long term level. Second thing, the double tops. In the second top, you will not be able to make the most money because there isn't a money. The only theme that you are following is candlesticks, so that you are always on the right side of the track, not on the wrong side of the track. That's the biggest thing. The third thing, gaps. Always remember, gaps will happen frequently on the on the intraday level, and those are really important because they make or break the game. On the intraday level, you will have many like traps, so don't be afraid of those traps. Third thing, intraday level offers you a unique perspective that no other chart offers you. Now you might ask, what is that? That is the biggest candles of all. Now on the daily, weekly or monthly chart, you won't find those like huge candles. But on the intraday chart, you will find them. And remember, whichever biggest candle starts to form more and more, that trend is is the future. Example, right here you can see a big green candle, a big green candle, a big green candle, a big green candle. So it was bullish. Bullish. Then you see a big red candle. Then again you see big green candle. So it was what I call straight movement. Now, right till here, I was bullish. And then reds came back up. Then green came back up. Then red, green. This is the biggest green candle, but look at this red candle. Now, if you're bullish, you will never have a big red candle. But if you can find that, then remember, there is something wrong. You are in a problem. This red candle, this is one of the biggest. Once you find that, try to evaluate your understanding of the trend, because it means the trend is changing. And after this big candle, you'll find many big candles. This is the big candle, this is the big candle, this is the big candle. Trend moving down. Now let's see it further to understand what really happens. Now it's in a down run, it moves up, you buy, and you wait. Now we both know that there are bigger red candles forming like this one. So we need to be vigilant with our buys and sell. It says sell. Don't wait. Why? Because the biggest red candle happens on a sharp move. Second thing, always remember to put a stop loss. In a bigger moves, it will wipe your account off really sharp, and you should not be waiting for them to happen. You should have a backup plan, that is stop losses. Once you see this kind of a green candle right here, that's a bullish engulfing candle, so that's your friend. Believe in your friend and buy. It moves higher, stops, goes lower. Sell. Right here. But the move, or like the main crux of the game is, it's currently moving within this red candle. That's never a good move. If you remember, this is the biggest red candle and it moved within that biggest red candle, moved up. That's never a good thought. Remember this. Or bullish perspective, although I'm showing you buys, all these are buys order. But the biggest, what I call the relief in a downtrend is once it crosses the high of this red candle. Once it crosses the open of this red candle, there is a relief because the downtrend like ceased. We have a relief that it will move up. Example, this fall. It moved higher, but did it close above this open? No. That's the bad thing. It told us don't believe in it. Even this red candle, just look at it. It moved up, but did it cross this open? No. So this is your golden candle. This red candle's open, you need it to cross on the green candles. Otherwise, you are in trouble. It says buy again. But remember to put stop losses. And remember, losses are currently the probability of losses is currently too much high. So don't be afraid. Wait. Now right here, this open was 1222. This close was 1222.91. This open was 1222.04. So this green candle has opened higher. So first relief has come up. But we need it to cross this high. And then we will be at ease. But it drops. And you are again out. Now it's telling you that there is relief. But it's telling you if it comes back in to this red candle's body, that's not a good part. That means there is serious concerns. Sell. Wait. If this green candle moves higher than this red candle, move buy. But your danger remains this red candle. So always keep an eye on the red candle, this big red candle, rather than anywhere else. And then it moves higher and crosses this high. Once it crosses it, you have a relief because now the downtrend has ceased to exist and the uptrend has come back. Now you are more at ease because you know that the downtrend has stopped. How? Number one thing is this high is crossed. Now if you can make this high cross, then you are in bullish mode. And if you look at the high point right here, it has crossed these highs. So on the downtrend, as we discussed earlier, you need the highs to get crossed for an uptrend to come in. And this is doing exactly that, this green candle. So now your good friend, this green candle is putting you back in business. It's telling you that now it's far easier to run up than to go down. See? It moves higher. And it falls right here. So you'll be selling it, but just look at it right here. On this candle, 1227, from 1227 till 1242, we made easy money. Because we knew that there was no risk. If you would have sold even here, then even now, bullish momentum is far easier. See, green comes back up. And in a bullish momentum, greens will be dominating it. After every 3, 4, 5 red candles, you will be finding a good green candle. And the basic aim is to get good green candle. But if you look at the fall, there were no good green candles. They were all medium-sized candles. If you look at it, this is bigger, this is bigger, this is bigger. Awesome big green candles. But right here, there were none. Reason? It was a fall and this was a rise. And when the big green candles dominated, after crossing this open, then this green candle, this green candle, this green candle, bigger candles came up. So a change in trend will bring bigger players into the picture. And that's a good thing. And that's what I call the game changer. So remember this. The game changer is always under your control. You just need to be vigilant. Now, if you look at it, This is a big green candle. So it tells you to stay bullish. Number 2. I've discussed with you different techniques. Now I'm discussing another technique. That technique is known as following the biggest candle. Now this technique I have not discussed in any of the other chapters. And now the students who have completed so much of this course, now they deserve this new technique. That is the biggest green candle technique. If you put a stop loss on the biggest green candle, example right here, and the price moves higher, so you will have no problems. Then once this candle comes up, you can place the stop loss here. It moves up, it falls off. Then again, the lowest low is this. You place your stop loss here, then it moves up. And in a box theory, I've discussed box theory and I have told you that you will be expecting losses, right? But what's the solution out of it? The biggest green candle. Now, in a box, the biggest green candle is your best friend. And the lowest low is your best friend. This low is your stop loss. And that way, you won't lose money in a box. Because right here, it's also a box. The top band is here. The bottom band is this low. So, on the low, you can place a stop loss. Now, as you can see, the price moves higher, 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 and higher. If I just zoom out to show you some other stuff, we cross this high. Now, these highs are coming, and then this high is here. Once we cross this moment in time, our next target will be 1280s, 1284, I guess. Wait a minute. Yeah, 1282. So, we just need the price to run up from here. Let me zoom in further. It doesn't look that bad, so wait. Boom. It goes down, so your stop loss should always be there on the open. You sell. Now, if you look at one major finding, you'll find a new method also. The thing, where does the price stops? It stops at the same moments. Example, right on this high, it came right on this open, it came higher and then it stopped and dipped. So on the high moment, it usually stops. This is the second top moments. See, it came above it and then it stopped and it's going lower. The third high is this and the fourth high is this. So we can expect stoppage on these highs. Now, once I say stoppage, I'm not saying that sell. I'm saying be vigilant. Increase your stop losses. Make sure that you are on the right track. Don't panic. Because if you will know something change is coming, you'll make good returns. Now just look at this candle. It rose from 1248 till 1261 within this one candle. And that's how you see bigger green candles. But on the fall, you are seeing bigger red candles. So that's the change. And bigger green candle means if even the price falls, it won't go below this open. If it falls. Otherwise, it will just move higher. Just look at it. It goes down. Now, although it's a sell signal, and I'm placing a sell order, but what I'm trying to show you is how powerful these big, large, white or green candles are. Now, if you look at it, they are moving straight. So this open is left on the low. Why? Because people are afraid to risk their bets. Just look at this. Again, a green candle with a bigger move. So you'll find more and more green candles, big, large green candles on the high moments. And that defines that you are in the right trend or not. Now it opens lower. Yes, that's not a good thing on an uptrend. But on the intraday level, these big candles tell you that you are on the right track. Yes, the open lower is not a good thing and you should be vigilant about it. But the point is to remember what you are going through. what should be your trading plan. And that's what shows you. Because the biggest mistake of traders is when to short and when to buy. And these green candles tell you when to buy. Now again, it's a big green candle, not bigger than like the other ones. This is a bit smaller than this green candle, but still it is pointing higher. It's telling you that you are on the right track. See? Now again, it's in a box method, so you can expect smaller losses, but you know the trend is up, so eventually the price will move higher. See, again a big green candle. So big green candles tells you that the trend is bullish. And we move further higher. Again, it's a sell signal right here. So that's how you know what is happening. But in a box trend, always zoom out to look at where the box is happening. It's happening here. Now, is this the same box previously in history? Example, this high and this low. Now I've picked this high and this low. It's following the same box. So remember, previous boxes also like initiate newer boxes at the same price levels. So just keep an eye on them. And it's the same box previously. Now the previous box was in May 26th, in May and start of June. And this is August. So it's like 3 months apart. But the point is not the months apart. The point is it's the same rates. Now on the lower side it has crossed below this box. Now what am I trying to tell you? Just look at the red candle. Now this red candle should bring alarms into your trading format. It should tell you that there is something definitely wrong. It should not have brought such a bad red candle. This is the game-changing candle. This doesn't bring a good luck to the trading. And the bad part, look at the green candles. They're not trying to cover it up. They're just trying to make you fools. Just look at it. These are moving up. There is a gap as well. But in a red candle, there is a gap. And if it comes back to fill it, it's a complete short sell. Now it has moved higher. But boom, look at this. Look at the red candle. Again, a bigger candle. Now if you look at it, I have not placed a buy order here. Because these red candles tell me I am definitely in the wrong direction. And I should be vigilant. Just look at it. Price does come up and moves even further higher. Extreme higher. But these red candles foretells that the fortunes are turning. Now I'm not saying don't buy. You should buy. But what I am trying to say is there is something definitely wrong in the game plan. And that's what I am trying to say, the long-term game plan. And if you look at it, and if I zoom out, these highs have crossed to touch this highest point. But I am sure that this is telling you that now it will again move lower. Now I am not talking about some short-term trend. What I am talking about is these two red candles are telling you that although the trend is up and you would have made more money, but it's on the last what I call basis. Now what do I mean by that? Now there is a specific reason. First of all, the reason I didn't place the buy orders from now on is because now I'm focusing on another aspect. The aspect that will change your game. Number one thing. These red candle represents that the major buyer is now out. Now there is no major buyer. What really happens in that moment is there is no major buyer. So the retail investor comes in and they make the price run higher. Why? Because there is no major seller as well. And the seller with the price marking higher is shorting smaller quantities. If I want to sell a million shares, I'm shorting 500 shares. Like smaller quantities, extreme small. Now million is like huge, but I'm shorting extreme small quantities. I short, make it increase till the highest point. If I zoom out, this point, and then I increase my short selling to fall off. Again it rises up, and now again short selling will be increased. See? And that's the like game changing. So people try to trap you with this kind of moves. And that's the best thing to short on the highest point. Why? Because these red candles represent a bad thing. Now another aspect is that it should fall from here extremely sharp. If it doesn't, then I as a short seller will be start squaring my positions. Right here, this is the moment that it should drop. It should not wait. It should not form box. If it forms box, that's the bad thing. Now it should fall. It doesn't. It doesn't. It goes straight. That's where I will start squaring my position if I'm short sold. Reason? Because in a fall, you need the price to go lower, not straight. Straight means someone is buying. And I as a short seller will be buying in that as well. Reason? I don't want to get stuck. Now in a bull run, if I just zoom out, I will show you that it moved up, up, up. It did went straight but moved higher. Now, if it was moving higher, then this is not a good moment to short sell because it's moving higher. Same way, if I'm short selling, then it should move lower, not straight. Straight for a short seller is bad omen, and you should just get out. Now, this was the first high. This I believe is the second high, but it's higher, so you cannot say second high. But that doesn't matter. What matters is I'm short selling, right? So I believe the price should fall off. It should break this low. If you remember the initial things that I said, lows should start going lower. Is this low broken? No, it's going straight. That's the bad thing. So always square it off if you're short sold. Don't risk it. You need lows to be broken in a short sell, not straight trading. Thank you.